Good morning, everyone watching this. This is the Crypto and Coffee podcast. I'm joined by my two co-hosts, David Blackstone, Cordell Tani, and my name is Giordano Bursa. And today, on another episode of the podcast, we have a very insightful topic to you: automation of trading and investing, as well as financial decision making. So today, the biggest question we can ask right now is: it humans even needed anymore in trading or investing? And I would like to know your thoughts on that, Cordell. From the standpoint of owning a whole consulting company, doing quantitative finance with AI. Let me know your initial thoughts or your overview of it.
Yeah, well, I don't think we're at the point where we can say you don't need a human in the loop for any kind of financial trading or financial advice. I do think, it is important to understand, let's say, the differences between investing and trading. It's just something that would come up very often, because they're not the same thing. So when we typically think of investing, we normally think of a long-term plan. You have a long-term objective, you build a portfolio with a specific asset mix that's designed to hit that long-term goal. Normally we express it as something, okay, I need to make 7% a year for the next 20 years so that I could retire with X amount of dollars. It's usually how we would typically frame, in a very simplistic way, investing, whereas trading is much more short term. And, it's designed whether, to just make as much money as quickly as possible or to have a specific objective. But it's generally it's a short term horizon compared to investing. So then the tools that you're going to use for each might be different. Of course, there's going to be an overlap, but you don't necessarily need the same tools for a long-term horizon as you would for, let's say, a shorter term trading. So, you know, do you need a human? Absolutely. We're near the point where I would say you can just delegate investment making decisions to any kind of AI. The agentic systems that you program, they still have to be programmed with a context. Like, you're going to assign a role. Let's say one of the agents I have is, let's say you have four different analysts working together, and you have one main analyst or agent on top whose job is to analyze all of the information from all of the four other agents and then come up with the decision. So you're kind of replicating the way an investment team would work. You have analysts. Each one of those analysts has a specific responsibility. And then you have the CIO, whose job it is to make the ultimate decision, the chief investment officer. So you still have to program this agent to replicate that structure. And if you don't have that domain knowledge or anything like that, it's still a garbage in, garbage out process. So no, I don't think, just as a blanket statement, no, you still need a human in the loop.
Okay, understood. So my very biggest question right now to you is, seeing as AI is being like a big thing right now, right? What would you say to, let's say, bad data in some of your algorithms, or even like their algorithm being saturated? Like, a lot of people are using this specific model to trade.
Well, I'm not sure what you mean by like a specific model. Those are two separate issues. Let's say, first off, data. We all know this just from what we do. All three of us do. Your data, it's a garbage in, garbage out process, and your data source is incredibly important. Doing the due diligence on the data source. There's a number of things you have to look at for your data. So let's say if you're planning on getting into some kind of algorithmic trading, or you're planning on doing some kind of automated trading, you're a beginner out there, you need data. That's the first thing you're going to need, is aside from hopefully having a hypothesis, an idea to test, because you need the data to test that hypothesis.
True.
The problem is, there's no shortage of data sources out there, right? You can get for $25, $30 a month, pretty much data on anything. The problem is, you do have to understand if that data is good. There's certain characteristics that you need to find in data. Completeness, like, are you missing dates? How far back does it go? Because if you're only going to get 3-5 years of something, 3-5 years is not a lot of data. It's not a lot of data to train a model. And remember, financial data is not the same as other data for a number of reasons, because one, you don't have 2 billion customer orders on Amazon to work with or something like that. You have a limited amount of data. It's a time series most of the time, which is, most of the time you got like 20, 25 years, which is not a lot especially for machine learning and AI models. So, you have to have that issue of, can I get enough data? How good is the data? Is it complete? Is it accurate? Are there gaps in it? How often does the site make a mistake in its data? These are all things that you need to consider when you start evaluating a data source. And they're not always that easy to do, right? You're only going to really figure it out when your algorithm breaks, when you just get an error message in Python that says, oh, a key error or something, they couldn't find the date because all of a sudden there was a missing date inside the data. So the data quality is a huge issue. Like, not everybody's going to be able to afford a Bloomberg or a FactSet at $30,000 a year.
Yeah. So David, what about you? What are your thoughts on, like using AI for automation of, trading, investing, or even this financial decision making for business or just in general?
Well, I would agree that you can't really use it for that right now, but since the main part of they can't really make the decisions, they still make mistakes, has been brought up. I'll bring up another angle. Now, there's a little that can be expanded on that first. Humans make mistakes, so even if a machine makes mistakes, if it makes mistakes less, that is a better approach. That is moving in the right direction. So, like if you have a human that would misdiagnose cancer roughly 5% of the time, and a machine would only do it 0.5% of the time. Yeah, it's still making mistakes, but it's doing it much, much better than the human would. The problem on that, though, is when it does make a mistake, who are you going to sue? Like, who is the one that's responsible? So if it's driving and it gets into a car wreck, who's going to be sued? Like, everyone wants someone to blame, even when you have an entire system at fault. They want one person to blame every single time. With the Nazis, they want Hitler. Like, if Hitler, if you go back and kill baby Hitler, and the Nazis never would have happened, maybe, but maybe it wasn't just one guy. Maybe the reason why they had so many people go along with him is because many people were thinking that way, not just one guy that's super charismatic that can suddenly convince an entire nation to go somewhere. Maybe it's because it's not just one person at fault, but we have the whole thing of, oh yeah, if you just stop Thanos, then the snap won't happen. Yeah, so it's a super villain idea. So we don't have super villains, we have systems, but everyone wants to blame one person. So you want one person, one entity, one thing that you can put all the blame on because it's simple, and that is not going to be a machine. So no matter when, you're going to have an issue of who is going to be responsible on this. Like, you can have a computer that's 100% right, 99. Well, you can have a computer that's 100% right all the time. Like, it's always right for years, and then it makes one mistake. Like, it could be a very, very minor mistake, but then all of a sudden, because it's been so right for so long, people are throwing fits all over the place because it made one mistake, one tiny, tiny little mistake. It could be like the McDonald's thing. Now, she actually had burns and everything, but it could be like the McDonald's mistake of coffee being a little bit too hot. This is the whole McDonald's side of the story on that. If that was true, if it was just a little bit too hot, if it just scorched your tongue a little bit because you drank it a little too early, and that was a mistake, you'd still have someone that wants to sue. And so you'd still have someone that needs to be responsible. So I don't think it's going to be ready, and I don't think it's ever going to be ready. I think it's always going to be a tool.
Because everyone's too scared of lawyers. And that's pretty much what it comes down to. Well, I mean, I think also when we start thinking about it, automated trading and automated advice and all of that, let's just think of a little bit about the evolution of it too, right? So because, automated investing or automated investment advice it's not new. We've had robo-advisors now for close to 10 years. Whether a robo-advisor is a real AI, no. it's normally just based on a set of rules. If this asset class is doing better than overweight, it's just a very simplistic set of rules that's designed to give people a way of just doing an investment on a discount brokerage platform without having to pay the commissions, having to pay the fees of a financial advisor, and then just get a very basic asset mix of, let's say, 5 to 7 ETFs, and you just switch between them according to economic conditions. Great. I mean, that's been around for a very long time. I mean, Schwab made a killing off of this business when it first started in about 2010 or 11. Don't quote me exactly on the years, but like Schwab just took in an insane amount of assets because of how appealing it is, right? Because when it comes down to it, financial advisors, when do you need somebody to help you? That's really the first question. Do you need somebody? How do you find the person, and how much should you pay them? And that's really where a lot of the pushback has become, is because these people like financial advisors can make a lot of money, and a lot of the time it's seen that they don't really do much. And so that was really a lot of the pushback. Why should I pay somebody when I can just get cheap ETFs that have like a 5 basis point annual fee, and the fees that you're not paying compound? You save so much money over time. But the value of somebody, when you need somebody to help you with your investments, and I'm talking about investments here, not trading, like longer term, your retirement plans and everything, when the value of the relationship that you get from somebody that you're going to hire is not necessarily to pick stocks for you, right? Unless that's your goal. I want you to hit grand slams and make me $1 million. Okay. But for most people, it's because you have a specific goal and you don't know how to get there. So a lot of it comes down to that gap in the expertise. So I'm going to hire somebody to help me get to where I need to get to because they have the knowledge, the experience to do it. I don't. The question then is, are people now getting enough of the experience or enough of the knowledge because of the tools that we have that they don't need somebody else to do it anymore? So that's where I think, the AI and a lot of this is going to come into it. Is if I just go into ChatGPT or an AI and say, I need to build a portfolio today, like what's going to be the quality of that portfolio? And this becomes different than a robo-advisor because now the AI is going to do it based on studying all the thousands of papers and all the stuff that it's been trained on to give an informed answer of what an asset mix should be. Of course, you'll get a disclaimer at the bottom saying you should probably go speak to a real financial advisor and don't trust AI because it makes mistakes. So is the information that people are going to get coming out of an AI good enough to build a portfolio for the long run that can replace the advisor? So that's the next question that I would ask here, is where are we with that? Personally, I would not trust an AI for that kind of advice, but that's, many people are going to disagree with me. The reason why I'm saying that is because I've been in this business for 25 years, and I have obviously a very biased belief that you need somebody with that kind of experience to really help guide through the financial markets. So, I mean, that's where I'd leave it for now for you guys to comment on that, is if we're at the point where no more robo-advisors because they're too simplistic and they didn't really add value per se in terms of beating the market, can now you go one level further with an LLM and get good financial advice? So let's leave out the trading question for a second. We can come back to trading after. We're talking about investing. Would you feel comfortable going to ChatGPT and saying, build a portfolio for me, I need to retire in 20, just whatever you put in your goals? How would you feel about ChatGPT doing that for you?
Personally, David, you want to go first?
I wouldn't do it, but I also wouldn't go to ChatGPT to have it act as my girlfriend or boyfriend. And you have plenty of people doing that. And you'd think that it would be the guys, but there are plenty of girls doing it too. Like, you have literal articles about this. Now, if you have people who are willing to do that, like people who are willing to use it for therapy, people who are willing to use it for dating, like you're dating ChatGPT, like one instance of many with ChatGPT, then yeah, people are going to be willing to do that. So even if we aren't, someone will be, and plenty of people will be, in fact. So many, in fact, that for this case that you've probably not thought about, there are companies that are coming out that are making money off of that use case. Like they're making good money off of that. So even if we wouldn't use it for trading, there are other sillier scenarios that people are using this for, where they're making plenty of money. So there are going to be people who are going to want to do that.
Well, I mean, there definitely are. I mean, I know people, look, we see articles all the time. Oh, I tested ChatGPT to build a portfolio. And look, honestly, you don't really need an AI to tell you to pick 5 ETFs. You pick one broad, like the S&P 500, something for international equities, something for bonds, and then something, let's say, a non-correlated asset class, some kind of market neutral or something that's just lower risk. Oh, I'm sorry, you don't need an AI to tell you that. Okay. Like that's just basic portfolio theory that's been around for 50, 60 years. So, the question would then become, okay, analyze, like let's say we take this one step further. Instead of just saying, build me a portfolio. And I say, well, build me a portfolio that's actually grounded in current economic theory, what's the events. This is where I would start testing the AI to see, okay, can it synthesize current economic data and actually replace the CIO, replace the head of asset allocation at a hedge fund that could now, instead of just saying, just pick a static mix of 5 ETFs and you'll be fine for like Warren Buffett style for the next 20 years. What if you said, okay, now I want you to reevaluate it at the end of every quarter, taking into account economic data, market-based metrics, and decide on how to do what we call a tactical asset allocation, which is how you deviate from your long-term strategic asset allocation by plus or minus a little bit on each of the asset classes to take advantage of current market conditions. Now, that would be the test. And then to see how it would do quarter after quarter and judge the quality of its decisions, that would be the test for me, really, to see if you can start really replacing a human kind of thing. And then, of course, there's other aspects to it. We don't really talk about estate planning, insurance, and everything like that, because that's all part of what a good financial advisor does for you. It's what they call, in jargon, a holistic plan. Can the AI start taking into account your insurance needs, life insurance, critical illness? How can it do estate planning for you? And I have a feeling, actually, it's going to be getting, like, I would probably be very pleasantly surprised if I went to an AI and say, build me an insurance and a succession plan for this financial situation. I have a feeling it would do a really, really good job.
Yeah. Point. Well, can it versus will it are two different questions, in my opinion. Yeah. Can it? Yes. And because with what you've described, it's basically just programming. You're doing software engineering, but with human language. So yeah, we've used software for analysis of these things, or at least pulling up the data and running through it to some extent for years now. So yeah, you can definitely do that. How much are you going to get out of it? That's the difference there, because it's still a tool, and you have 2 different levels of hammer use, one between a 5-year-old and one between a carpenter. So yeah, you have like there are grades to this. Now you can have someone who knows what they're doing, who can dive into that, and who can use all the terminology, pull up all the different things, remember all the different pieces that need to go into it, and they're going to do very, very well with it. Someone who has no idea and is relying entirely on the LLM to pull on that for them, they're going to miss so much. And the LLM is not going to pull up everything for them. Yeah, it'll probably suggest a few things. Maybe if they go through it for 100 iterations, maybe. But for most people, it's not going to do that. You have an instance where people are finding that those who use LLMs are getting dumber than those who aren't. And it's not necessarily that the people who are using LLMs are getting dumber. That's not necessarily the case. What it could be is that it's amplifying you, because you're able to do a lot more of what you would do normally. So if you're generally, your general tendency is to do research on a topic before trying to figure out what to do, it's going to be able to pull in a lot of data for you that you can then run through. If your general tendency is to rely on others and go with the herd, it's probably going to help you with doing that, and you're probably going to get a little bit dumber for it. So now with things like this, yeah, you want to be able to You want to be able to extrapolate data. You can do that. You can absolutely do that. You can come up with formulas. You can put them into what you can put them into a sheet. You can get a lot of data out into that same sheet, run the formula over that, and then you can figure out what's going to happen based off of the trend lines, the data points, all of that stuff. But are most people going to do that? Probably not.
No. I mean, most people are lazy. That's part of the issue, right? That's what's going to be pushing people more to the LLMs. I mean, I'm sorry, but most people are lazy and cheap. They don't want to pay somebody, and especially, like, why would I pay for something if I can get it for free, and especially if I can get it done quickly? So, I mean, that's one of the huge appeal. Like, we're all guilty of that. I'm guilty of that. I mean, even just when I think about how much my job has changed in the past 2 months alone because of Claude Code, right? I mean, it's just incredible, because now I can get something done in 3 hours that normally took a week, and I spend most of that 3 hours designing the prompt. And then once I design the prompt and the whole file structure, that Claude Code takes care of everything, can build an investment strategy for me in a matter of minutes. It's crazy. And that's the same thing really with what people can do now, with the AI to come up with a financial plan. And I do think, though, that aside from like the natural appeal because it's fast and it's cheap and something like that, I mean, one way that we would have to judge it in terms of its success, right, is how comfortable people, it's not just the results that they're getting, but it's almost if they're feeling comfortable with the service they're getting from the LLM, because we never think about how important it is that we feel that our needs are, or we're being listened to. And it's so easy to feel that the LLM is listening to you when you start saying, these are my concerns. This is what my objectives are, whereas very often with humans, you can always get the feeling that someone has a lack of empathy, or they're more in it for themselves. So I have a feeling we might be easily drawn into the LLM because, just like you said, with the girlfriend or a boyfriend or a therapist, how many people use it for therapy, that you sort of feel that connection to it, even though it's just a program. So, and I think that connection will actually make people want to trust it a little bit more, or just it'll build that relationship with it. And, like, let me give you, like, do you say please and thank you when you're done, with a prompt, or like after you've just used the AI for something? Do you say please and thank you?
No, not really.
See, I do.
But you have like there's something that I need to mention on that. You have how most people use AI, and then you have how software engineers use it, and there's literally people who are making fun of that, because you have someone who, just for a video, created an extension on top of Claude Code that creates a whip, and he clicks the whip and it just types in, it does the whipping motion and the cracking sound, and it just types in faster, give me the answer faster, type faster, think faster, just again and again and again. And that's all it does. And he literally just made that to take the video of it and compare that to like a girl on the therapy couch, just like, yeah, and that's how my day went and all that stuff. Like, it's two completely different styles of using it. One's using it as a person, the other's using it as a tool. I'm using it as a tool.
Yeah. I mean, go ahead, Gio, and then I'll come back to why I brought up the please and thank you. But go ahead, man. Do you say please and thank you?
I personally, sometimes I do. I'll be honest, depending on how long the prompt is, but I think later down the line, there's going to be an AI for everything, right? And at some point, I think regulation needs to be a key factor in how we use it, right? So how do you think governments are going to really just take the shift from that, right? There's already an AI for coding. I'm sure there's AI for marketing, and soon down the line, there's probably going to be an AI for, financial advice. Someone's probably building it right.
Well, I think we're already there. I mean, like Perplexity, is quite good for a lot of the financial stuff, especially for analyzing financial statements and things like that. I mean, but that's a little bit more specific than, let's say, trying to replicate an investment advisor. I mean, it's a good question. I mean, personally, I think I can just say in Canada, the regulators are already so far behind the times with the rest of their responsibilities. I mean, they're still so focused on the fees being paid by everybody, like it's nonstop. But I also find it's a little bit difficult. I think it really depends on the country as well, Gio, because here, I mean, Canada, everything's run by a self-regulatory body, meaning you take the executives of all of the big banks and all of the big trading places in Canada and say, regulate yourselves. So, but that's what an SRO is, a self-regulatory organization. And that's what Canada is. Canada is run by, yes, we have our provincial regulators, but for the most part, it's all just, they're self-governed. So, but I think also because Canada, we're a very conservative country. We're not known for being cowboys and risk takers. So I would say the proportion of people that are willing to use AI in Canada right now for investments is not very high. I think it becomes much more systemic when you start having the investment professionals using AI. Right. So when you start having investment advisors using AI to either handle client records or to make recommendations, that's where the problem's going to come in, because it's the people dealing with the public that are in this position with a fiduciary duty. That's where they're going to, because our government and our regulators have consistently taking the position that Canadians are too dumb to take care of themselves, and they need to put laws in to protect us from the predator investment industry. So I think that's more where the regulation is going to absolutely be more important, is the people dealing with the public and how they're using AI, as opposed to how the public is using AI. Because when the public's using AI, it's caveat emptor, right? You're on your own. If you're dumb enough to do something like that, I don't mean like to use AI, but if you're dumb enough to trust AI to put you into a penny stock and then you lose all of your money, well, that's your problem. It's not the same thing as somebody having convinced you to do it, right? So I think that's where the regulation is going to come. But I just wanted to finish off something with the please and thank you. The reason why I brought that up is because when you just say something like please and thank you, the LLM responds in kind. And it'll say something to you. It'll say something nice. And then what do? Then you say something. The next thing you know, you're having this makeshift conversation with the LLM. Let's say you just finished a big project, and I'll say, thank you very much. You did very well on that project. And then they'll come back, well, thank you. But you've had your 25 years of experience really help me. So then it starts flattering. The next thing you know, you're feeling this is what builds the relationship with the LLM. And then the next thing you know, like you're having these little innocuous conversations with it, and that builds a relationship. That's how humans build relationships, whether it's with a machine or not. And that's what's going to get people to probably trust the LLM a little bit more, is when you start just doing those little things that actually mimic a human relationship. So anyways, I just wanted to say that to finish that off. But I mean, in terms of the regulators, I mean, I think the US and Canada are very, very different. Yeah. I can only really speak to those two jurisdictions. I don't know how the rest of them. I mean, Europe is really, in terms of privacy and everything like that, I think Europe would be the one that would probably be a lot more aggressive on the regulations.
David, your thoughts?
Well, I do think that this would go a little bit more into the philosophical, but or psychological. But like with the maybe both. But with what you mentioned on how people are going to be building relationships with it, yes, and they absolutely will. And like, it's not a fake relationship or anything. It's just a different relationship. Yep. That'll probably throw some people off, but I'll explain it. The way that relationships form is like if you look at people and how they operate with these things, they say, we're in love, or we're or yeah, this guy's so trustworthy, or all these things, and yet people are tricked. So you have the guy who like every guy that gets married thinks that his wife is absolutely wonderful. So she'll never leave him. She's clearly in it for the love and not for the money, and all of this stuff. Every guy that gets married thinks that. Every single one. So when you have a divorce rate that's so high, that and so many of those are prompted by the women, and so many of those are attempts to get money, those guys that were thinking that, they weren't feeling her emotion. They weren't feeling, they weren't thinking through what she was thinking. They weren't like, yeah, they were probably feeling empathy and everything. They were probably thinking, oh yeah, this is how it appears she's feeling and all that thing. But you cannot feel the other person's emotions. You can't know, you're not in the other person's head. You're not a mind reader. So when you're feeling those things, when you're saying things like we're in love, or that person is so trustworthy, that's not a full reflection on them. That's more of a reflection on you and how you think things are. So when you're in a conversation with an LLM, yeah, you can start trusting it and everything, but that's a reflection on you. You believe it's trustworthy. If you're falling in love with your LLM, yeah, that's a reflection on you. You're getting all these cute, cuddly feelings. The LLM is not, but those are on you. So yeah, you can absolutely have a relationship because like those feelings and the interaction, those are part of the relationship. The human experience is part memory, part experience, and that you're getting both of those. Like you're getting the hormones, yes, because yes, you're feeling the reward center, like you're getting the dopamine. So yeah, you're getting what you need in order to get a relationship there. Is it a real relationship? I think so, because you're getting all those individual parts. You're not going to be able to actually be able to, like, with regardless of anyone you're talking to, if that person's being fake, then it's exactly the same as you're talking with an LM. Yeah, it's fake, yeah, but so is the other person if they weren't being authentic. So you have this whole issue here of, yeah, you can talk to an LM, you can feel it's trustworthy and everything. It can lie the same way a human can. If it comes up with facts just to try to appease you, because it thinks that that's what you want to hear, and it thinks that's what's going to continue getting the interaction, how is that any different from a gold digger who's trying to get continued interaction so she can get to her reward? The LLM's reward is continued interaction with you. The gold digger's reward is the gold. So both of them want continued interaction for that reward purpose, and both are fake. But we generally only think about the fake part with regards to the LLM. It can happen with humans too. So, like, yeah, you can think it's trustworthy. That doesn't make it trustworthy.
No, of course not. But that's the same thing with humans, right? You could assume someone's trustworthy and just based on your interactions, and then they're not. But I think that's part of the whole thing, right? It's at what point does the relationship just completely fool your brain into thinking it's no different than any other human relationship? So the one thing I wanted to bring up, because we've been talking a lot about the investing aspect of it, and can AI and whatever replace a human? My opinion is no. I mean, it can to a certain degree, but I mean, if you really we're trying to build out a financial plan, including insurance, estate planning, whatever, you need a human. You need someone with the experience, and a good advisor is worth what you pay them. They should earn the fee. But trading is a little bit of a different story. So I said trading is more short term. So now your tools become a little bit different, because now you're just trying to make as much money, or you're executing a trading strategy. So this is where I think the current state of algorithms, AI, technology, all of it is actually empowering a lot of individuals to do things that, quite frankly, they couldn't be doing otherwise. And, in terms of way the brokerages are offering now APIs, let's say, the gold standard would be interactive brokers, the tools are there. So when we think about investing, and okay, that's a long-term thing. This is really planning for my retirement. Most people will not take all of their assets and put it into a trading strategy, right? It's more, I don't call it the play money. I usually go with this core satellite approach, where, your core portfolio would be maybe your long-term plan, and then your satellite is the stuff that you can afford to take more risks on and stuff like that. But when you think about what you can do nowadays with the AI in terms of, build me a trading strategy that focuses on moving averages or something like that, the LLM is going to do an incredible job at producing this kind of thing. And then it'll give you all the code needed to execute it automatically. So if I think of my normal tech stack right now, let's say I build an investment strategy, and let's say I don't need the trading to be automated because I'm in Canada. I don't have that many options to do automated trading. And if most of my strategies are evaluating daily or monthly, well, honestly, I can do the trades myself. It's more if you're doing high frequency, like every 5 minutes, or you need something constantly monitoring your signals. So it's just like I will build my strategy and then I will put it on a cloud computation thing so that it computes automatically in the cloud whenever the evaluation is, and then sends out a signal to me via Telegram or email so that I know that I have to trade. Like getting that done nowadays is incredibly easy. Right? Doesn't replace the fact that you still need to be able to build a good strategy, know what a good strategy is, and know how to back test. And that's where most people fail, is they don't know how to back test a strategy properly. They're going to think they've discovered the most amazing thing when in the end they just got lucky and it was a statistical anomaly. That's really the big problem out there for people that want to start doing more AI automated trading, is that for the most part, 99% of people will never understand how to test the strategy properly to make sure that it's going to work in real life and not just in your Python environment. But the skill, like to just go into a prompt and say, this is what I want to do, or take a research paper. I read about this strategy on a newsletter. I want you to write the Python code for me. I want you to write the code so I can put it on Python anywhere and automate it. And to the point where, let's say I'm using Alpaca or interactive brokers, and then write the code to interact with my broker. Like that can all be done so quickly with minimal human, other than doing the prompt. And I think that's where the huge opportunity, and I think that's where, the disruption is going to be much more, is on the trading aspect of it right now. I mean, look, this is what I do, and this is, the book I'm writing is all about this, so I'm a little bit biased, but I think the AI for helping for trading and building this stuff, this is where the real potential is. And then think about cryptocurrencies, because that trades 24/7.
So let me ask you something, Cordell. Let me just bring it back to the whole topic of automation, trading, investing, and just financial decision making on a whole, right? We've talked about many benefits on previous episodes. Like, let's say for instance, buying a subscription for AI is a lot cheaper than hiring, right? Who do you think benefits more from this shift, right? Because from the whole premise, people saying AI right now is like the internet in the early 2000s. Who really benefits from this shift, retail or institutions?
Well, I think everybody benefits from it, but it's going to be a different benefit, right? So at the retail level, the retail benefits because they now have the opportunity to do what the institutions were only able to do a few years ago. So I hate the term, it democratizes, it's such terrible jargon, but it democratizes a lot of hedge fund and institutional style technology and strategies that would have been completely beyond retail's reach 5-10 years ago. The institution side, it's just the efficiency and operational gains that could come from AI are crazy, because now you're talking about being able to process information, read research reports, and I'm not even talking about using AI or machine learning for like alpha generation to deliver, a signal that your edge, something that'll help for trading. The majority of the low-hanging fruits that institutions are going after right now, it's to replace the tedious human tasks of having to do the same activity every day, like reading research reports. And if you have to go through 100 companies filings every day, AI can take over that responsibility. So the institution, and then of course for speeding up trading and finding the best way to route your order flow. So imagine you had 100 million of a trade to do as an institution. Now the AI can completely analyze the pattern of trading that stock, find the best times of a day. So, you know what? You don't want to trade into high volume times, not into low volume times. If you trade in low volume, you're going to have wider bid-ask spreads. Your transaction costs are going to go up. So now the AI could map out all of the different exchanges. It can incorporate the dark pools. Dark pools are what a lot of banks and brokers operate, that's reserved for institutions that the public doesn't have access to. So, if I have to place a big order, I can first go to the dark pool, maybe get a better price. And then if I can't do it there, then I'm going to go to a real exchange. So the AI handles all of this for them now. So institutions are doing this much more for efficiency and operational gains. The hedge funds are doing this for alpha, but the majority of people out there in institutional space are doing this for operational and efficiency gains. And for retail, well, now I'm able to execute strategies using my Python and AI that, 10 years ago, there's no way I could have done this. So I think both are really going to benefit from it. Just they're going to benefit from it differently and to different degrees.
Okay. David, in your opinion, who actually benefits from this current AI shift? Retail or institutions? What are your thoughts?
I think institutions. Retail does benefit overall in the end when you look at the trend of human progress, but overall with our lifetimes, what we've seen is every time you have a company doing better, it's usually at the expense of people. Now before us, before the shift off the gold standard, you had everything getting better in America for everyone, absolutely. But as technology improved, it improved the lives of people. Recently, every time you see an improvement to a technology, what's the benefit? You have the 3D printing now getting applied to meat, which is coming from which, like, if you know anything about that process, like, well, where are they getting the meat from? Like, they can't just grow meat without it like unbounded and have it be profitable without having certain cuts with regards to standards. Like, for example, cancer. If you want to grow meat unbounded and have it be done cheaply, you have it done through cancer. So if you want to have like in the case of improving their bottom line for another food company, you have Reese's. They were recently called out by their founder. I think it was either a founder or a family member of the founder for not having chocolate and peanut butter in their entire recipe, which is chocolate and peanut butter. Like, it's a chocolate and peanut butter cup with no chocolate and no peanut butter. It's literally all oils, binding agents, and fake tastes. No, fake flavorings. So you have and how did that happen? You have various other things like when you and this does not benefit the consumer at all, but you've probably heard about it. When you look at the ingredients list, what do you think of when it comes to natural flavors? Generally, you as a consumer, you're going to think, well, okay, yeah, they got that from nature. Okay, that's like, this is orange juice. It's probably made with oranges then, because it comes from natural flavors. No, there's a natural flavors company. That's what they're referring to. So all these benefits,
you're saying it's like McDonald's on their wrapper when they said 100% beef, that was just the name of the company making the beef, and that the fact that the patty was actually 100% beef. So you're saying when they're saying natural flavors, that's just the name of the company?
Yeah, that's exactly it.
I hadn't even thought of that.
Yeah,
now
and
I
these
wish
are
I
benefits.
hadn't.
Yeah, these are benefits that these are benefits to the company. Their stock goes up because they're making more of a profit. They're reducing expenses. They fire the employees. That doesn't help. That doesn't help the general people. That doesn't help retail at all. But it does help their company. And every time they fire employees, make their product worse, reduce the price, anything along these lines, their stock goes up. But what happens to everything for us? Everything gets worse every single time they do this. You have AI, and what's coming out with them? Well, OpenAI, they wanted to go into defense, and part of the reason why Anthropic pulled out was because of what the government wanted to do, essentially using it to spy on citizens, like going against the Constitution on that. And OpenAI, they just stepped up and said, we'll do it. So yeah, that benefits OpenAI. That doesn't benefit us. Overall, with most of these things that companies have been doing in recent times, yeah, it benefits the company. Absolutely. It doesn't benefit us. With all this stuff, I do think that there is eventually going to be a benefit to us, because any tool is a tool. If you use a knife, you can use it to make food for someone and feed them, or you can use it to stab someone and kill them. A tool is a tool. What these companies are using it for is for their benefit, absolutely. It's at our expense, absolutely. Eventually, someone is going to come along and actually try to make people's lives better. At which point, yes, it will be applied properly and it will make people's lives better. For the near term, probably not.
Okay. So
Yeah.
let me ask
Go ahead.
this.
Sorry, go ahead, Gio.
Yeah, let me ask this question, just like a closing question, right? Just, do you think in the next probably 5 to 10 years, do you think that, finance will be, fully automated with AI, or like, we will still have like a human to AI collaboration in the future?
I think it's on a scale, right? So
Yes.
let's say today it's about, don't quote me on the numbers, let's say 25% AI, 75% human. I think you're going to see 75% AI, 25% human, let's say in the next 5 to 10 years, because, everyone's having this conversation now. How do we use AI? Which is, by the way, the wrong way to approach it, because everybody thinks, okay, they read so much about AI. Everyone just thinks, okay, we have to use AI. How can we use it? As opposed to figuring out where your bottlenecks and your problems lie, then finding a solution for that problem, and maybe AI is the solution. So I don't like to see people reverse engineer saying, oh, we need to use AI and then let's go find how to use it. No, the way to use it is break down your entire process, like break down everything that your company or that you need to do in a day into like a huge flow diagram. Identify every single one of those that's a problem, that's something that can be improved upon or something that needs to be fixed. And then you start looking at a whole range of solutions. And one possible solution of many might be AI. And if that's the best tool for that solving that problem, then you should use it. That's how I work with my clients and try and get them to build AI, things like that. But my point is this. Everyone's starting to think of it though now. So everybody is trying to figure out, okay, we can improve what we're doing with AI, whether it's just by speeding up our manual tasks. Like I have so many friends right now that are using Cowork to do everything, building their dashboards, building their, so I started using it to do my monthly expense reports, for my company and so it just slowly and slowly, every single one of these tasks that you realize can be sped up and improved with AI, it's just going to keep snowballing and more of these tasks until you get to the point when you think of an asset manager, 75% of those tasks ranging from compliance, trading execution, a lot of the research. Ultimately, what you really cannot replace is the business development and the relationship handling with your clients. So it might get to the point, the way I see it in 5 years, is that almost all a lot of the focus from asset managers is going to be on the relationship side with their clients and business development, such that the majority of the other tasks can all be handled by AI and not by people.
Okay, well put, well articulated. David, what do you think in the next 5 to 10 years?
Oh yeah, I think people are still going to be involved. If nothing else, because you want someone to blame if something goes wrong. If everything went well on your side, you wouldn't care. If it was a human or an AI, in fact, you'd probably prefer it would be an AI just so you don't have to wait on the human. With all the stuff that goes wrong, though, yeah, you're going to want a human there, so just so you have someone to blame. Maybe not you specifically, but like out there, you. So with how people work, that's just the way it's going to be, at least for the near term. Like next 5 to 10 years, absolutely, people are still going to be involved. Even if AI could absolutely do everything, people are going to be involved.
Yeah.
It can't yet, but yeah, people are going to be involved. It's not necessarily a bad thing. It's not necessarily a good thing. It's not necessarily a bad thing. It's just how it is.
It's a thing.
Now,
it's a thing.
Yeah. Yeah. Now, something to mention is that no one's ever thought of this before. That's wrong. People have thought about this before, and people have thought about this before with regards to other technologies. Like, for example, back in India with sewing machines, they didn't like sewing machines because it was getting rid of the jobs of all the seamstresses, and they had this whole thing against that. With regards to ATMs and bank tellers, no one, I don't remember any talk about that, but ATMs basically do what bank tellers did, and now bank tellers do other things. Like, we still have bank tellers. They still do. They still work there. They just do
Yeah, but
other
not
things.
as many. Not as
Yeah.
many. And the
Yeah,
lineups
not as
are
many.
ridiculous. Okay, so
But what we have instead are other financial jobs that are also exist in the bank. So eventually, what this new tool can do, since it does improve efficiency, is open up new jobs in other places. It's not necessarily like, yeah, maybe it'll maybe for the short term it'll cause pain within the population, and yeah, that happens with every technology. Eventually, it's going to make people's lives better. Like, in the short term, don't know. I don't imagine it's going to go too well in the short term. Generally, generally that would be the track record. But in the long term, absolutely. And yeah, in the short term, people are still going to be involved.
Okay.
Yep, no, I agree.
Mhm.
I agree, and I mean, I definitely agree with that. I think the nature of jobs will change. Everything's like that will change. I think it's like it's just human resources, right? We are resources, and society will figure out a way to redeploy the resources.
True. And Cordell, I do remember you were about to say something even before I asked that question. Do you still remember what it was?
Probably not, but trading, institutions, retail, no. I mean, look, I love this stuff. I'm a little biased, I still think people, I still see a lot of hesitancy from market players, the asset managers. I think a lot of people still know they have to do something, but they don't know what to do. And I think the biggest risk to any of this being adopted, more automation, everything is all compliance. It's the compliance departments that freak out when all of a sudden they're starting to see automated trading or a lot of, so the compliance departments just don't know what to do. They don't know how they're supposed to deal with everybody starting to use AI. And I think that's the biggest thing that stops AI from being adopted more on the asset management side is compliance reasons. And it's a good reason because it's a wild west to a certain degree, and no one wants to be the first one to take that risk.
That is true, because most of the time, when it comes to like regulations, it's more or less, what you can control.
Yeah. I mean, compliance, it's, exactly what David's saying, the fear of getting sued or the fear of being offside on regulations, it dominates everything, and it will stifle risk taking. It will stifle innovation to a degree, and I think this also goes back to something that David said multiple times over many of our episodes. The difference between China and the West is just that, the West is run by lawyers and China isn't, and they're going to be able to go leaps and bounds ahead of us as long as we're still worried about finding somebody. As David said, it's always about finding someone to blame. A lot of our society is built on blaming somebody else for something. Like that's why we have so many lawyers, because we need to blame somebody else for everything that goes wrong. I think David's 100% right by that. It's a dominant force in Western society is the need to blame somebody else for everything.
Yeah, I completely agree. So I think the best thing is, we end off here. And this has been episode 15, where we talked about a little bit more about automation of, trading, investing, as well as, financial decision making. David and Cordell, you guys had a lot of great points. And, see you guys for next week's episode, or next 2 weeks episode 16.
Right. Thank you, everyone. We love you.
All right. See you guys later.